Hello everyone, this is Andrew McNair from SWAN Capital with our November 2020 SWAN report. In this month's video, we're going to discuss some recent headlines that influenced the financial markets in October. But I also want to provide you some perspective on what these developments could mean for you and your family over the next few months ahead. Now, as always, please stay tuned at the end of this video for some required disclosure statements. Inaction on a fiscal stimulus bill and rising COVID-19 cases, both here and abroad, put pressure on stock market prices in October. The Dow we saw lagged much of the year dropped 5%. The S&P 500 fell by 3%, and the NASDAQ slipped by more than 2%. The theme moving markets recently was the new fiscal stimulus bill, which many believe is needed to keep this recovery moving forward. But when talks appeared on track, stocks rallied. When negotiations finally broke down, stocks fell in result. So as hope for a stimulus deal faded, a surge in COVID-19 cases here in the US and Europe added to a souring market sentiment. And as we saw in October, as the month came to a close, many companies reported solid earnings for the third quarter, but the market seemed overwhelmed by macro issues, with a selling into this earnings season and the final week of trading. So the market seemed to love the idea after the election of a Republican-controlled Senate as to be really a check and balance to the extreme policy actions from the progressive wing of the Democratic Party. They also seem to see it as a contraction, not an expansion, of Democratic control of the House of Representatives. And a divided government all but guarantees there will be gridlock in Washington. And as we know from gridlock in the past, it guarantees that no new major policy initiatives will happen. That means no new tax hikes. That means that the Trump tax cuts will likely remain, and that's great news. It also means that the prospect of that Green New Deal that would cost trillions will probably not occur. While these issues all seemed dire a few weeks ago, the potential lack of forward movement drove the market upward last week. And after the prior week's drop spurred by spiking coronavirus cases and the fears of renewed shutdowns in various states. And we've said it before, that volatility would return as we neared the election and probably persist afterward if the election got messy, which it did. The bottom line, though, is that we didn't see a big distinctive red or blue wave. But since markets will actually have some time to actually run and make money, that's what we want to see them do, and that's going to be because of the Washington gridlock. There will always be a show in Washington, but the bigger question will be, will all this commotion result in anything new? And right now, my answer is no. So what happens next? What can we see over the next few months ahead as 2020 comes to a wrap? The initial bout of euphoria will soon be replaced by calls for more stimulus to help our economy. As virus cases are rising and calls for potential shutdowns loom, this really will worry everyone until we see a COVID-19 vaccine. And that's where we saw Pfizer come in with some news, which did soothe fears. But until we have a vaccine that we can rally behind and that everyone believes in, I doubt you'll see anything settle out until early 2021. Now, the possibility that we won't see a stimulus package begs the question. If we have a vaccine and the economy opens fully, will additional stimulus even be useful? We will get a lot of opinions from the experts, but in the days and weeks ahead, if you've taken anything from my commentaries over the past few months, it's to be wary of experts. There's never a shortage of opinions and what-ifs. It's important to stay vigilant and question the motivations of the source of those experts. We need to look for information that's sound, that ultimately, hopefully, unites us moving forward. Now, if we turn our focus to the jobs situation, it's improving despite a lack of stimulus, and the Fed just sits back. But luckily, with the third quarter GDP numbers and the October jobs report, we saw that the economy is still in recovery mode. We saw that non-farm payrolls increased by 640,000 and that the unemployment rate fell to 7%. Also, we saw in the wage report that wages were up, and by and large, it was a very positive report. Now, the jobs rebound has been amazing, but the jury is still out on whether this upward trend persists for a long time. After the election results are unpacked, Going forward, I feel that the fourth quarter will be strong, but with a new regime in Washington in 2021, all bets are off. But we will see with the gridlock we talked about. But once a new president is in there, we will see executive orders be removed and new ones issued. And we can only bet that that will affect the economy as well as specific industry like the oil industry. Now, we look at the Federal Reserve, and it's also met last week, and it reiterated that it would not raise rates anytime soon. And the Fed's resolve to stay put should continue to help the stock market in the near term. But that punch bowl will eventually dry up. The economy cannot be propped up permanently by government spending and artificially low rates. That's it. Signing off for November 2020. Looking forward to seeing you again in December. But remember that nothing that we talk about here is a recommendation. If you have questions about your personal financial give our office a call at 850-380-9558. Talk to you soon.